us right there. We are now live. So,
We are live. Let me turn this off.
Thank you
yeah,
for letting us
see,
know about the
I've done this with her before, and I was midstream consciousness, and she's like, and we're live. Oh.
We need
Bruce Buffer
Oh my gosh. Hello, Facebook family. Hey, do me a favor and go ahead and share this. Tag someone. We're talking about the state of the market address, not the state of the union, but the state of the market. We're talking about real estate, and we got some experts here who is going to be able to tell us all about what's going on and what's happening. So tag your family, your friends, and make sure you share this live. So I'm Fontanese Green, and I am a local real estate agent here in Mercer County, primarily. And yeah, we're here today. We're going to have everybody introduce themselves. Nice laid back forum. So put your questions in the comment section, okay? So we can check them out. So who want to go first?
Sure.
Jake.
My name is Jacob Prosser, and I'm a wealth advisor here with First Commonwealth. I've been a wealth advisor for about 7 years now. It's all I've done to start my career, so love what I do, won't do anything differently.
Awesome.
John Boyd, business banker. I do the commercial lending with First Commonwealth Bank. Jake, I appreciate you not punching me in the face with throwing all the information out there, so we started off calmly. Been in this position before.
He's random.
I did get threatened.
That's great.
Are you good?
I'm good.
Okay. Sarah Cipriano with Novus Home Mortgage, and I do mortgage lending, residential only, no commercial.
And I'm Tom Sullivan. I'm the Senior Vice President of the Mortgage Sales Team for First Commonwealth Bank, and really happy to be here. I'm excited to mix it up with all of you guys and talk about the business and the state of the union here.
Awesome. Well, we are excited to be here today. And you guys know how it goes. Make sure you tag and share and put your questions in the comment section so we can answer them for you. And so we're just going to get started here. Like, just throwing something out there. Like, what's going on? What's the market look like to y'all? How are you? What do you think? Anybody?
I'll jump in.
Go ahead,
I'll fire away.
Sure.
So some fun stuff, right? So think about this. We talk about inventory, right?
Mm-hmm.
We talk about the concerns about where we're at and where is the inventory. So I was on Redfin before this meeting. 82% of borrowers that have a home currently have an interest rate of 5% or better. 82%. So what's happening is a lot of these people are protecting that asset, right? They're protecting that asset, so we're having inventory issues for that reason. However, the crazy part of all of it is first-time home buyers are all over the place. They're pre-qualifying like crazy. I'm sure you can account for that.
Oh, yeah.
They're pre-qualifying, being pre-approved. However, they're right now not having the ability to get that inventory to get that house. But the reason why I bring that up is because we need to, as mortgage professionals, have specialized programs that can help first-time home buyers. So product suites for first-time home buyers is the key, so we can give them options, so to speak, when the time comes.
Absolutely.
So I think it's a crazy thing. So there's a ton of people interested. It's the first-time home buyers because they're not used to that 3 and 4% interest rate. But then you have people that own homes right now protecting that 3 and 4% interest rate. So
Absolutely.
I think once we see the interest rate environment hitting that high 5% range, you're going to see people feel like it's more worth it to break free, and then that inventory piece will come to fruition, and we'll be able to open up. So, I mean, just a little tidbit there. I think the last thing I'll say, and I'll be quiet, is we are at the lowest pre-approval / application status. So going into application, the lowest applications in 28 years for purchases right now. 28 years. So put that in perspective. So people are getting pre-qualified, but they don't have a house to get, and they're on the sideline. They want to get in the game.
Yeah.
They want to play the game, but that's what's happening right now. So I'll be quiet now, but that's kind of what we're seeing right now in the industry.
It's interesting too how competitive it still is, though. You go to buy a home and people are still paying over ask because the inventory is so low.
It is.
Very
I,
It's
I
100%.
closed in a week, and it was not the most fun process right now. There wasn't a lot available, and anytime one did come available, that was a bit of a, one that really you would want. It was just very, very competitive to get in. Multiple offer situations, escalation clauses, you name it.
We're fishing out of the same pond, right? All of us, and that's where in the industry now we have to be super creative with our product set. So like a community bank like First Commonwealth, for example, we have 12 investors we can sell loans to, but we also have that portfolio, which means we'll hold those loans in house and provide specialized products. And those specialized products can be outside the box, for first-time home buyers, whether it's a 100% financing option or a 1% down, no mortgage insurance option. We have to find and really challenge ourselves to be innovative in this time to really deliver out in the communities.
Now, that portfolio, that's where you just think those people that have like the 400 credit score, right?
Yes, John. No. That's wrong. Thank you, John. That's exactly what we don't look for. But I appreciate you. No, it's just no. It's funny because we were just talking about that. But yeah, we look for customers that have solid credit. We look for we'll go down to 620 on a credit score in our portfolio for certain products, right? So it's just a matter of suitability. Is it asset driven? Is it do they have a clean overall credit profile? Do they have a bump in the road that we can understand and explain? That's I think the beauty and the power of a portfolio.
Sure.
Being able to tell the story, put it all together, not have an automated underwriting system make that decision for us. We can collaboratively talk about those loans, if that makes sense.
Yeah. No, I mean, because that's important. And when you said someone may have had a bump in the road, because a lot of people are almost, and there are some that are ashamed
Sure,
of where
absolutely.
their credit is or has been, or you know what I mean? And it's not necessarily, something that they would live in, stay there and wallow in there. It could just be, this was a time, where
there's no
things.
question.
Think about 2020. I know many individuals that started a business in late 2019 or very, very beginning of 2020, and once everything, they had fine credit.
Yeah.
But once, they got shut down, their business was brand new, and they couldn't stay afloat.
Yeah.
Sometimes that's the story, like you said, that you need to tell. Like this individual, they didn't bury their credit, from some terrible decision. They
Right.
kind of were a product of an unfortunate circumstance.
Well, and that's what happened. And I know you can account for this.
Yeah.
In self-employed borrowers, after when the pandemic hit and post-pandemic, it was really hard to get loans closed through Fannie Mae and Freddie Mac. And we're on the same team as far as that's concerned. We have 12 investors that we sell loans to, and they wouldn't fit in the Fannie Freddie box. So that's when you looked at the portfolio. Hey, do they have a lot of assets in their accounts? Do they have good credit? Are they putting a larger down payment down? Can we tell the story with the updated profit and loss statement? Can we really explain, hey, this is a good borrower that went through a heck of a time, as we all did.
Yeah.
And that's that's how John and I work. We talk about things constructively, collaboratively, and I think that's the fun part of my job too, because as it's like an investor, it's yay or nay for the most part. With the portfolio, it's hey, let's sit down and talk about this.
Well, and it's so important to know that life happens, right?
It does.
You have these situations, but it's not the end of the road. I mean, I talk to people all the time that might have a 590 score, they might have a 600 score, they think they can't get pre-approved, and they can. Sometimes you have to be a little creative with how you're underwriting things or how you're structuring a file, but that's part of just knowing your guidelines and knowing, how to make it work, even with Fannie and Freddie. I always try to tell people, I don't care what your situation is or how bad you think it is. Let's just take a look at it, because you might not be as bad off as what you think you are. Because Aunt Sally, she knows what she did in the 70s, but things are just so different, right? I mean, you don't need 20% down to buy a house. You don't need 10% down a lot of times. You know, FHA is not the devil, I promise. Like, there's things that,
again, my
right,
God.
I mean, like, at the end of the day, when you sell a house, you buy a house, you're spending and you're receiving money, and it's all green. It's all the same. So, I mean, there's just a lot of horror stories about things that might have happened that are just not relevant anymore, that aren't true, so.
And, you know, I think in a big picture, right? If you go to McDonald's and you have a really bad experience, it's always going to be like, I hate McDonald's. You're going to tell everybody, hey, I had this horrible experience at McDonald's. But you never go and say, hey, I had a great experience at McDonald's today. You just expected it to be good.
Yeah.
And I think with FHA and a lot of different things in the industry, people talk about the bad stuff that happened.
Right.
But I know lots of people where it's like, hey, we bought a new house, and they didn't even tell us that they bought a house. It's like, hey, come over, we got a new house. Whoa, where'd that come from? They didn't share that great experience. They shared the, oh, hey, the FHA, the peeling paint, we couldn't get it past the peeling paint inspection.
Right.
I had to sweep the yard with all those paint chips.
Right.
Railings,
Come on.
why do we need those for? You know, I know, I agree, but I think that's the other thing that's so important now as we talk about first-time home buyers, for example. They're so important right now for, you know, our business and our industries, you know, period. And I think sometimes we all forget where we came from. You know, I bought my first house in North Hills for $130,000 with an FHA loan, you know, and, you know, we have to remember that, you know, those first-time home buyers, those are the people that build the foundation for our bank. Because I remember exactly who gave me my keys, right? I remember who was involved in that entire transaction, and then we can work to bank the entire relationship. So, you know, you never forget the first of anything, especially in, you know, with your first time you buy a house. So that's why we've been so really diligent putting together all kind of first time home buyer programs for that specific reason. You know, so it's just good to think about ways that we can be better right now, especially when things aren't as busy. Really what it comes down to.
Well, and really just to add to that, you know, if people, and I tell clients all the time, if you have questions, like, use me. That's what I'm here for. Like, I'm always going to answer. We're going to answer your questions. We're going to get down to it. But you just have to, voice what it is you're concerned with, you know. Some people are more concerned with how much money they're taking to closing. Some people are more concerned about payments. So those are all conversations that are really tailored to that family, you know. And there's not 100% the right way to do one thing or the other. It's whatever is your preference.
Yeah.
And you know, Sarah, you even mentioned too about how to structure a file. And my first thought was, that's why you need the right people in your corner on your team. You know, someone who knows how to help you. You know what I mean? Because so often, like, I understand, like, there are some institutions or banks or whatever that, you know, is like, is FHA conventional. You know what I mean? It's just straight to the point. You know what I mean? However, we don't all fit in those boxes. You know what I mean? Sometimes it takes something different in order to help me or to help my, you know, so that's so important.
Well, yeah, I mean, because just in you know, this is, you know, I'm going to nerd out a little bit here.
Go ahead and
Just
nerd
like
out.
running things through, like, underwriting. So Fannie Mae, Freddie Mac, there's 2 different underwriting systems, right? So when you run those through, it'll tell you, okay, is it, and this is what you were talking about, you know, outside of the portfolio. That's where they can kind of decide what they want to do. But these just say yes or no. Like, it's either approved, eligible, or it's a refer, which means you can't do it. But sometimes shortening up the term by 5 years makes it so that it goes from a refer to an approve, or sometimes adding it from 5% down to 7%. Like, it's the silly little things that just changing and tweaking it a little bit doesn't make a huge financial difference,
Right.
but it changes from somebody getting a house to not getting a house, you know?
It's true. It's automated. I mean, we've seen adding 3 months to reserves changes the game, right?
Changes the
It's
game.
it's incredible, and it's honestly, it's putting it on paper to the borrower. Like, for example, we mentioned FHA loans. There's no income restriction. You can make $1 million and get an FHA loan, right? You know, that might be a perfect fit for somebody. You know, somebody that doesn't have a ton of money that lives in a low to moderate income census tract. It may be, you know, one of our portfolio products, or Home Ready, Home Possible, something like that. You know, what you need to do is be able to tell the customer, here are your 4 paths. Here are the pros and cons of these 4 paths. You need to choose what's best for you. the whole key of what we're doing today in mortgage lending is trying to give them more than one path. I like to at least have 3 to 4 solutions so they can pick their path and understand it from soup to nuts what it looks like. So that's the key. But you make a great point. You know, not all loan officers are created equal. Period. And you know, you have one loan officer that doesn't go through the AUS system the right way, doesn't run DU versus LP, you know, and doesn't have that ability to. Some only run through Fannie and Freddie. You know, it's just one of those
Now
things.
Tom's nerding out.
I'll nerd out. I'll nerd out.
It's contagious.
I know, right?
I'll nerd out hard. But you know I'm right. It's true. It's true though, right?
Yeah, it is true.
Yeah.
So I got a question, because you mentioned something, and it's a question that I get, even though I'm not mortgage, you know, I'm dangerous enough to talk about.
No, you do a good job.
So
You are dangerous though.
FHA, first time home buyer, right? That's FHA equals first time home buyer, right?
Technically not.
No.
Anyone can do it.
Really?
Anyone.
Because this is a question, and I think it's just a misconception that people have.
It is.
Hey, FHA is a first time home buyer program, and I can use it one time in my life, right?
Federal Housing Authority.
It's
Oh, okay.
Yeah.
Give me some more.
Go ahead. I'll let you take it.
So yeah, I mean, technically in the market, a first-time home buyer is considered anybody who hasn't owned a home in the last 3 years. But as far as programs are concerned, anybody can get an FHA loan as long as they don't have one already. Now there's some, what do I want to say? Exceptions.
There's some exceptions.
There's some exceptions to it. So like, if you say you co-signed for somebody, or say you have a manufactured home and you're buying a different house that might better your situation, they'll allow in certain cases like that for you to have two. But otherwise, anybody can get an FHA loan. So you as a conventional, like say you have a house right now and you're relocating, it's conventional and you're like, okay, I'm gonna move to Pittsburgh, and that house there, I don't want to put as much money down, like the house is in great condition, I just want to go FHA. You can do that. It's okay. As long as this house here isn't already FHA, you can do that.
Yep.
So yeah, you don't have to be a first-time home buyer to get that.
Yeah, and if you're, for example, too, is something fun for the FHA piece. Say, for example, you're selling a home that has an FHA loan on it, right? And you're buying a home that has an that you want to do FHA financing on. You know, what they'll sometimes do from an underwriting perspective is make sure the square footage makes sense. If, for example, you know, in that you're buying another house that you need it for because you added a family member or something like that. So it's reasonable too to go from FHA to FHA if it makes sense and you're going to be selling the home too. So it's just there's a lot though. Now you see why you need to have the right people, because it's a nerd fest in mortgage. It's 100% is.
And I can't tell you how many people that we've been able to help just because a loan officer maybe didn't know.
Absolutely,
you know?
I believe that.
You know, but there's all kinds of things. The worst thing you can do if you ask for an exception is they're going to tell you no, or they're going to say no, don't do this. But a lot of times, like your underwriter is going to say, maybe let's try like brainstorming. Let's try doing it this way, or let's try doing it that way and making it work. So, but yeah. It does not mean first-time home buyer.
Okay.
There you
The
go.
more you know.
Wow.
Right.
The rainbow.
So I guess if we're taking home anything today, FHA, not first time home
Not-
buyer.
No.
And many people think that.
Yeah, and I think we should also take home with us the grocery stick, but we'll talk about that offline.
That's offline.
That
The
is
patent ready
off
for
the
that.
record.
More to follow on that.
More to follow.
More
Just
to follow.
tune back in next time.
Yeah.
Oh my gosh. Well, let's talk about, so I have many people who reach out to me, who are renters, and they're like, oh, my landlord is raising my rent yet again. Can I buy a house? What would you say to that? Because rent is 100%, right?
That's
100% interest.
Right.
that's my line.
No.
I know.
Yeah,
I was like,
that's my
let me
line.
pull a Cipriano out, you know, and mortgage rates, you know, are where they at, but they're not 100%, you know. So let's talk about renting and buying, but sometimes it makes sense, right? Sometimes we have to rent, and that's okay.
It's just one of those things. I think rent is somewhere that you can. Oh, thanks.
Yeah, they agree.
Right.
Welcome to
But
Sixth Street.
think about it though. Rent. If you're working on your credit, you know, you do a 6-month lease situation or something like that. But I can tell you right now, nationally and even in Pennsylvania, rents now with landlords raising rent, perfect than you said, they're actually starting to outpace the rate environment. And that's crazy, right? We're in the mid sevens, let's just call it what it is. It's where we're at pretty much at this time. But I'm seeing rents versus the actual mortgage payments. I mean, they're almost a reflection of the same, or it's higher. So, I mean, the harder you work to get credit repair right now, I think rent is, that's great. I love that. 100% interest. I love that. That's a great line, but you're seriously just, you gotta get credit in line. I think that's the place where you need to be to get credit in line, but you can still buy a house right now still better than where rents are collectively, nationally, you know, so that's where I'm at with it.
You know, I think, and I never want to posture like, hey, landlords are terrible people that, hey, they're trying to raise the rents. Like, never going to be who I am. I have a lot of landlords. I am a landlord, right?
Sure.
But I think the other side of that is that specifically here in Mercer County, you've probably seen this, right? That Mercer County 5-6 years ago was pretty local. Everybody from Mercer County was from Mercer County that lived here. I've been seeing a lot of people moving into Mercer County from New York, Florida, LA, like places where they're used to paying these big rents at. And they're looking at these houses that, hey, this is a $60,000 house. I was paying $2,000 a month for this same house somewhere else. So I think it's going to be really interesting over the next couple of years with what happens in home values here, and then what happens with rents here as well. Because, you know, if I have a guy that's, hey, John, I like your house, I'm willing to pay you $2,500 a month for it, sign the lease.
Yeah.
Sold.
Yeah.
Sold. And I think even in Pittsburgh, some of those numbers still hold true. Lawrenceville saw this in masses. People coming from New York, Philadelphia, Chicago, big cities. And Lawrenceville was just, hey, this kind of podunk area of the city where rents were low and houses were cheap. And now rents are not low and houses are not cheap. You can't get into Lawrenceville for under, say, $250,000.
Yeah.
Fair to say?
2 to 250. Yeah. That's fair.
Well, COVID changed everything, you know, normalizing remote working. You know, before people wanted to meet in person all the time. They wanted to physically sign things. They wanted to, you know, sit down and talk about it and have a cup of coffee. And now I can barely get anybody to really like look at my face, you know, hopefully not because of my face, but, you know, but just because they like the convenience. They like, because their job's that way, you know, their groceries get delivered that way. Like everything in their life is so automated and convenient now that it allows for those people to come into an area that's so affordable like ours and really live, you know. So
Yeah, and as agents, like we're definitely seeing that people are moving in from all over, you know, because they can still, like, people are still remote. You know,
absolutely.
My sister works at an accounting firm in Pittsburgh, and she is still remote. You know, my son, he moved back here and still works in Pittsburgh, you know, because he's still remote.
Our underwriting team's remote. We actually did studies to show that they actually were more productive on our during turn times, and you know, our turn times period. I mean, we're averaging around 30 days on all of our closings right now, and you know, even if I compared apples to apples on months that were slow to now and put them up against each other, we're still picking up about 5 or 6 days. You know, so remotes worked really well for us. You know, so but it's mix and match. It's not a one size fits all by any means, for sure.
No, but that remote work that is moving people out of the city, certainly, and I mean, even you think about like yard space. You know, people are, the Strip District is a prime example of, you know, over rents, very expensive real estate with very minimal yard space. And so you know, that remote work has really pushed people into the residential areas to frankly just get a yard, have a place to be outside.
Yeah, no, that's real talk. Yeah, I know my son, just before COVID hit, or just as COVID was hitting, he had a 1-bedroom apartment in Plum he's paying over $800 for. So, I mean, and so now here in this area, do you feel like, I mean, I feel like people are like, I need to buy a home because I'm paying $1,200 a month in rent. I could probably be buying and owning a home, you know, for that.
Yeah, and I mean, and I think at the end of the day, when you have to buy a house, you have to buy a house.
Mhm.
You know what I mean? It's just part of life. It's what you're doing. So, you know, a lot of this younger generation, they know this is what they have to do. They're going to have to do it. I mean, it's either I'm going to live with my mom and dad, I'm going to pay somebody a crazy amount of rent, not John, because he doesn't charge a crazy
Right.
amount of rent.
He's one of the good guys.
Yeah, he's one of the good guys.
All right.
You know, or I'm going to buy something and have something to show for the money that I'm
Yeah.
spending. You know what I mean? So it's like at the end of the day, regardless of what the rates are, like your life goes on. You know what I mean? Like you still have to have some place to live. And if you want the freedom to do what you want to do and live how you want to live, you got to buy a house. And you know, it's just like we do where we have our rate protection program where if, you know, people who are buying houses right now, we'll refinance them in the next 5 years and not charge them for an appraisal or a lender cost. So like, cause that's going to happen. So I don't want to deter people and say, oh no, you're going to have all these costs again. Cause they ask that question.
Right.
They're like,
Right.
well, what happens when I refinance? Well, we just lower and we restructure it. Like that's what happens.
That's a good tool,
You know?
and we have something very similar to
Yeah.
that, but like a good point. So, for example, I think that another thing is always having tools in the toolbox to make things work.
For
So
sure.
we have bridge loans, okay? Now, why I bring up bridge loans is, and that's a retail product, it's not our mortgage product, but we'll go up to 80% loan to value on a bridge loan whenever someone's trying to buy a house, right? So they're all worked up about the interest rate environment. Well, now they can take that money from that bridge loan and just put a huge chunk of money down when they buy their house, and they don't feel like they're putting all that investment into 7-8% interest right now.
Yeah.
You know, and that's a 12-month loan, you know, on the bridge, and you know the houses are getting sold quick, so
Right.
that's a great product to be able to avoid the interest rate hikes that we're dealing with right now. But these
Sure.
are the things
Yeah.
that you have to have, the tools that you have to have, the education, the staff, the team, and that's not me selling, you know, a mortgage product. That's actually, you know,
It's a
retail
retail product.
product.
And the thing too is like that's why things like this are so good
Mm-hmm.
because we're collaborating, right?
Absolutely,
So if you're talking to somebody and they're like, "Oh no, don't talk to anybody else. I can do everything." That is a lie. Like you can't do that. You know what I mean? Like I can't do a bridge loan, so
Right.
that's something I'm like, "Hey, I got a guy for that. I trust him. He's a good guy. Let him do that." You know, I can't do home equities. Like, you know, you guys can do that kind of thing. So, you know, you have to know, and when you're dealing with clients and you guys all sound like you're the same, you're just doing what's in their best interest.
Right.
You know what I mean?
100%.
Like you have to collaborate with people and know what their toolbox has too, because then you're doing the right thing for your client that way. You have a fiduciary responsibility to do that. You know?
You know, and I would even say, I get excited when I'm in a competitive situation. A, it's nice to be able to flex the bank's muscles for me. B, it's also helpful, but it's helpful really to find out where you're at in the market.
I agree with that. I really
Yeah.
do.
Because, you know, we're I never feel comfortable saying we're a small bank anymore because it's just really
We just crossed 10 billion.
Because you cross
And
10
honestly,
billion.
who cares how small you are? If you have great products, who
People
cares?
do actually care a little bit.
Huh.
After the stuff
Silicon
that
Valley.
happened with Silicon Valley Bank,
Yeah.
it's like, hey, you're a small bank.
sure.
No, we're a medium bank.
Yeah, we're a medium.
I don't even work
And
there.
the people
They're a
say-
medium
and
bank.
people say, oh, okay, that's fine. You're a medium size. But we're big enough that we have all the products, right? We're small enough that I called Tom after we talked one day and said, hey, Tom, do you want to be a part of this? Head of Mortgages here. I've gotten phone calls from our president.
Yeah.
I can call our CEO. So we can affect change very quickly and say, hey, we're in a really bad position in the market, and that change can come down really quickly. And if we're never in those competitive situations, we never find out.
Right.
And it's just, hey, the phone stopped ringing. Why? We
Absolutely.
don't know.
And I think that's like, and that's why it's so important for, and I think you said this, Sarah, like to have times like this where we sit down and like we just talk, like it, and you said too, it is about the client. Like we have jobs because we have clients,
Yeah.
you know, and they are the most important in this situation. Like they're spending hard-earned money
Right.
to do business with us, you know.
They are.
And so we owe them to sit down and have conversations with one another. One thing my coach always says, she says, Fontanese, is always collaboration over competition. Always. Because it's about the client.
Yeah.
I totally agree with that. I mean, I can tell you right now, I have a half dozen people in this industry that are competitors that we bounce ideas off of each other all the time.
All the time.
All the time. And even sometimes even underwriting, you know, anything. Like, hey, what are you seeing? Here's what I see. Like, and it's just we all are hustling to do what's best for the customer. We're all trying to win. And those that are left in this industry and mortgage lending especially are the good ones, right? Let's just call it what it is. The people that really do a good job, understand products. So I appreciate competitors because they can make us better collaboratively. And the last thing I'm going to say too is you said we have a responsibility to help our customers. One of the things that we're doing other than just adding products, and that is also refining our processes, adding some technological pieces, finding more efficiencies. So when we are up 40% from where we are today, we can deliver a faster, more efficient, customer-friendly transaction. And that's another part of it. So it's operational, it's product, and which ultimately just makes the customer happier. Really,
Absolutely.
And back to the competition thing, you know what else I think is really important? Know when to punt. At some point, you can be in a position with a client, and it's like, hey, you know what? For what you're looking for, this person has the better product. Call them, or hey, John, can you compete with me on rate? Blah blah, whatever it may be. Sometimes it's just like, well, you know what? It's probably best that you go with them. They have the better product. It's a better fit. It's what they're looking for. It's what you're looking for. You guys are matching up. Let me step out of this with you. You guys go do what you need to do.
And
St. Aaron. Me and St. Aaron have been there.
Yeah, and that client will always talk about you. You know what I mean? They'll all let me tell you what John did for me and my family. You know what I mean? Like you'll always be in their mouth because as an agent, we hear that. You know what I'm saying? Like, oh my God, you won't believe how Sarah came through. And just. In fact, we talk about that all the time. Like, we hit her up on Facebook all the time because we know, like, she is up at 11 o'clock at night sending out pre-approvals. Like, I'm probably asleep in phone.
That's it.
I did change the phone to vibrate, so I at least hear it. Buzzing,
It really is kind of living out that fiduciary standard of care, living out being able to constantly do what's in your client's best interest. And it means a lot. It's like you said, you remember who gave you your first key. It's really about providing that one-on-one, specialized, personalized care for that individual situation. Because everybody's in a different walk of life. You don't know where somebody came from sometimes, you don't know where they're going. And it's just about being along the journey and being able to help them and do what's in their best interest.
Yeah, and it's education too. Like, for example, I'm not gonna sling mud at any lenders out there, but like you hear of like Rocket Mortgage, right? And honestly,
Sling that mud.
but let's just say, but let's be honest though, like you'll get a super fast answer. You'll get options for what you can do, and it'll be fast and it'll be super technologically sound. But the pricing's awful. Like it's not. You talk about fiduciary. I mean, when you're a point to a point and a half out of market, are we doing what's best for the customer? So it's the truth. I mean, I think all of us are priced pretty tight that want to do the right things. I mean, we're within 1/8% to 1/4 tops right now. I mean, you gotta do things the right way because we were talking about this before the podcast. It catches up to you. And you're done. It's game over. You treat people like that, someone's gonna call it out eventually, and then it's just gonna be a paper trail down the street. All the people that you didn't treat well. It's just the way it is.
Right, and I mean, people know their situation. You know what I mean? Like, you just gotta be honest with people and treat them with a little respect. Like, hey, this is your situation. We know this. This is how we're gonna get you to where you want to be. Like, what's your end goal? Like, do you want to have a house? Do you want to have a house? Would you rather rent? Like, what are your holdbacks for it? But one thing I have, and I said this before we even started this, like, a big thing that I come across as a lender is people are so worried about the money part of it, right? I've had people actually come to me and say, well, I just switched jobs because during COVID, everybody was switching jobs, right?
Yeah.
So they have these old retirement plans. They're like, I'm just going to pay cash for this house. I don't want to pay that interest rate. Can you tell people why that's terrible?
Well, I mean, generally.
Come on,
you-
Jake.
Yeah.
Because I get that a lot, and and a lot of people. So, and I understand the investment side of it, but it's like I'm not trying to just do a loan, but like
Right.
I want you to have your wealth plus have something to show for your wealth. You know what I mean? Like,
Right, absolutely.
So-
And I mean, when you think about, taking out of retirement accounts, you can be taxed to death on it. It can be taxed at ordinary income. There's different rules based on different accounts that you might have. Now, there's obviously ways around that. If you have a retirement account, you're a first-time home buyer, you could take it out tax-free to fund that purchase, which is a very, very nice option. I actually had a very close friend of mine do exactly that. But it kind of goes back to planning, and we do this often for our clients. Our clients will call us and they'll say, "Hey, I'm considering either moving or might want to buy a second home. What can we reasonably afford?" And it is that planning piece to say, "Hey, here are your options. Here, like you said, give a few options. Here are your options. Here, we think that this is the best option for you. We know this is the best option for you. These are on the table. Here's how you can get hurt by choosing a different option other than these." It's really that education piece, right? Figuring out where somebody's at in their life, what their thought process is right now, and making sure that they're on that right path. Because, like you say, you don't want them to throw their wealth away or their hard-earned time and their hard-earned savings just to get a house. And of course, like you said, there's options to be able to do that. But it's just about making sure that they're on the right path in the right direction.
well, because you shouldn't have to compromise one for the other. I don't feel
Exactly.
like,
No,
you know?
you should not have to compromise your financial security of your future
Right.
just for a house. You should be able to do both.
I had to make sure we snuck that. I literally,
Yeah.
that's a conversation. I just had it today. A client who needs to take money out just for a minimal, it's not a large amount, and she's like, well, but I think I'm going to get taxed. And my dad told me I'm going to pay this penalty. And I'm like, but you're not. You're a first time home buyer. You're going to get this. And she's like, are you sure? And I'm like, well, I'm not a CPA, so
Yeah.
double check.
Disclaimer.
But I'm for all legal purposes, I'm not but you've done this enough and you've talked to people and helped enough to see it. So people don't know that. They don't know that you can take money from your retirement, but you don't have to take the whole thing.
Right.
Yeah, certainly not.
So, because that just would be,
You know what's funny about retirement? He shared this with me a couple weeks ago, and I just never thought about this. That if you have a married couple, and I don't want to misquote you,
No, go ahead.
but I think he said if you have a married couple, they've been working for 30 years, in their retirement accounts, they probably have north of $1 million. I never even.
I mean,
You
just
started
think
thinking
about
about the numbers. I was like, yeah, I guess that does make sense.
Yeah, and you just think about the way the market has acted over 100-year period. Really, on average, a balanced portfolio. If you had your retirement accounts into a balanced portfolio, on average, you make 8% in your in that balanced portfolio. So if you think of somebody that is, let's say, whether it's the same company or many different companies, as long as they rolled it either into an IRA or a employer-sponsored plan, if they're just continuing to contribute over a 30-40 year career, you're going to amass some wealth in that. And when you think about a husband and wife, like a spouse, it's I would argue fine, they're going to have at least close, if not well over that $1 million mark. So people can really amass some really good wealth just doing sort of the minimum. You don't have to always go fund an outside brokerage account. Sometimes doing just a normal process. You work really hard for your money. You stock away in those retirement accounts. Keep what you need, and you'll do well in the end.
Yeah.
So they're downsizing, but you know, they're selling it, maybe they haven't done updates, so they're not gonna get as much as for whatever the case is, you know. So on average, they're gonna make 8% annually on their thing. So as long as, I mean, even if they're taking a loan out and they can use their systematic distributions or whatever to make their payment, at the end of the day, the house is paid off and they're still making a profit theoretically on their account. Like that's the win. That's what, okay.
Yeah, absolutely. And that's real. I mean, that's what we do on a day-to-day basis, right? Figure out what does, and it's not about making the most. It's not about squeezing every dollar you can out of the S&P 500. It's about having a more defined approach to say, you've worked really hard your entire life and you have amassed this amount of money. What do you reasonably need to earn to make ends meet, to do everything that you want to do in your life for the rest of your life? Yeah. And that, again, that looks different for everybody. For some people, it's, hey, I just don't want to run out of money. That's what I'm concerned with. For others, it's, hey, I want to be able to give X amount to my children. I want to be able to give X amount to charity. I want to buy that second home in Florida. And so everybody has just different goals and different walks of life. And so how they get there is, that's why I love this part of my job. I mean, we are able to show people real numbers and real results to get them to those goals that they want to hit in their life.
Yeah.
So as a wealth guy, you talked about the market a little bit. So as a wealth guy, what do you think you're seeing in the markets, and how do you think that's affecting mortgage and people wanting to buy? And hey, you know, there's a general fear right now. Interest rates are high. So what do you think the market has to do with that? How's it affecting it?
Well, the interest rates are high, but so are deposit rates, right? You know, a few years ago, you couldn't get 1% on your deposits, and now there's promo rates upwards of 5%.
Yeah, we have a 5% CD rate.
Absolutely.
Right, so there's ways to mitigate it. You think about U.S. Treasuries right now. We do a lot of investing into U.S. Treasuries for our clients, and those yield, you know, you can push those out, ladder a Treasury out, and you can make over 5%, close to 5.5% on the Treasury market. So even when you think about the market does well over time. There's always going to be some fear built in. People were scared from 2010 to 2021, 22, you know, and the market hammered for that amount of time. I mean, even in March of 2020, when everything kind of hit the fan, of course, there was a lot of fear baked into that, and the market had a massive dip. They still ended well positive on the year. You're not going to be able to time the market. The individuals that try to time the market lose all the time. I mean, the vast majority.
And I honestly think it's a lot of this stuff's overthought too, because we want to just go right down to brass tacks. The average person refinances their house every 4 years, right?
Really?
So, average person every 4 years refinance their house. And when you see right now what we're doing, right, you know, getting into 6, 7, 8% rates, those are at least 3-to-1 loans. I tell my team. The first time the rates go down 1%, they're going to refinance into, you know, the 30-year AM that they were in. The second time, they're going to go into a shorter term loan and refinance when another 1% goes down, and so on and so forth. So what everyone needs to really grasp and realize is they're not going to keep this loan for 30 years or 20 years or 15 years. So don't sit on the sidelines because interest rates are so high today, because systematically and statistically, you're not going to have that loan. You're not going to have that rate over any long duration.
So almost you can say, like, in the big scheme of things, it doesn't even matter.
To a degree, I mean,
Right. Maybe that's an overstatement, but
to a degree. Well, with rents being as high, honestly, sorry, landlord, but if with rents being as high as they are versus the interest rate environment, I mean, it's like it's right here, right? So why wouldn't you want to build equity in something, right, and have something that's yours versus 100% interest, which is a great line, by the way. I give you 100% credit for that. That's outstanding. But it's the truth. I mean, it can't be any more true, right? So that's if rents were still low and, you know, houses weren't appreciating and things like that, then we'd have a whole other conversation, a very honest conversation. But it's still a place where you can, get some wealth out of your buck, even if it's a little higher interest than what we're used to over the last several years.
Wow, that's good stuff. This is good. But I wanted to ask Jake, since when you were talking, like, what would you, so we do have a lot of entrepreneurs in this area. How would you, or what advice would you give them, like, as far as investing, because they don't have a company match?
Right.
You know what I mean? So what would you suggest? Just, you know, as it's going to be broad.
Small
'cause
business
everybody's
owner.
different.
you
Yeah.
know, so, one, there's available options for small business owners too, like a SEP IRA is a great option for a small business owner that doesn't have the 70 to 100 employees that you can implement a big retirement plan into there. That's a great option, but honestly, for someone that is getting started in investing, just invest in some S&P index funds, S&P 500 index funds. Get started, start to become a little bit more knowledgeable into those bases. Open up just a small brokerage account, whether it's with an advisor or on your own.
What's a small brokerage account?
Yeah, it's like a Vanguard account, a
Okay.
Fidelity
Okay.
account.
And I know,
of any
like, I just
size,
want-
of any
yeah,
size,
I
you know,
want to understand it,
it's-
you know what I mean?
it's not. I think, and that's a good point. I think there is a big misconception of I want to start investing, but I only have $1,000.
Right.
You know, I don't have $50,000 or $100,000 to invest. You don't need that. What you need is to have a good budget, a good plan to say, here's the money I have now to invest. Let's get that started. Let's. This is money I don't need and I don't need to look at. That's an important point as well.
Very much.
And figure out how much you can reasonably afford on a monthly or semi-monthly basis to put away to continue to fund that account. Just don't look at it all the time.
Yeah.
That's the big thing. People get so emotional about the ups and downs of the markets. When I just told you, over 100 years, average annual 8% on a balanced
Set it and
portfolio.
forget it.
Yeah.
Set it and forget about it.
Yeah.
When you need it, you'll be retired and you'll have plenty left over. I think that's what's really, really important, is just having a defined approach. Sit down and think of your situation within yourself to say, I can put this away without worrying about it. I don't need this money. How can I make this money do better for me?
Right.
So I think that's an important way to do it. And then of course on the for the entrepreneurs that are going to start a business, no matter what that business looks like, have an exit strategy. It doesn't matter how early you started the business; anything can happen along the way.
Yeah.
So having an exit strategy is very important, and you don't want to wait until the end to do it. You don't want to wait until you say, I think I'm going to be done in a year, but I don't know what to do with this. You know, I've done pretty well. I've done plenty well for myself. What do I do now? And that's where, of course, we provide that advice for our clients and business owners, but, it is about understanding what you want to do. And, of course, some people want to sell their business. It's a great option. How do they do it?
Right.
And sometimes how do you do it without letting your employees know? Right?
Sure.
Right? It's an important distinction.
Absolutely.
And sometimes you have to lean on people to make that happen without your employees knowing, and that's fine. You should be able to lean on resources and have that collaboration like we had talked about earlier.
Right.
But there are many different ways for business owners as strategies to, we'll call it a succession plan. And so it's about thinking through those and just making sure you have a good plan in place.
Yeah.
I'll go even a step further with that, because one of my good friends is now almost harassing me about getting my stuff in order for just life, just setting up my trust and setting up the wills and stuff for the kids.
Yeah.
Because it's never too early to start having that end of life conversation.
That's right.
Because, I could walk, I was in Bloomfield earlier today and there was a couple thousand rounds shot off.
That's what I
I know.
heard.
It was crazy.
Yeah.
Anything can happen.
Yep.
And
That's
not
crazy.
even just for the small business owner, but for the individual, because real estate is a great way to create generational wealth.
Certainly.
So have a plan for that as well. And I think to your point, the most important thing is, hey, let's not get this analysis paralysis of, hey, I don't have $100,000 to put in. Do something.
Right.
Start something.
And
Start
that's
somewhere.
it. Start
right?
somewhere.
Yeah.
Yeah.
And once you get started, you start to understand more about it. And so just like, that's just it, just get started. But, even on kind of the estate planning side, rather, other than what we've been talking about, but there was I'll give a small example. Husband and wife and their kids, they're on the highway headed to vacation. There's a crash in front of them, and it ends up being deadly. They go on their way to vacation, they have a great vacation. On the way back, they start to have a conversation in the car to say, what if that was us?
Mm-hmm.
We don't have a will. We don't have anything in place. You have to be prepared. It doesn't matter if you have children or don't have children. It doesn't matter if you have a big family or a small family. Just be prepared, because we never know when we're getting called.
True.
We never know when it's our time. And that can be 110 or it can be tomorrow. But being prepared, it takes a lot of that burden off your family.
Absolutely.
It does.
Yeah. So that's a big thing to think about when you think about planning for your own life. Think about your family.
Yeah.
Well, I have good news. Your dressy white shirt has lived up to the billing. You have delivered.
Thank you.
Really good information.
Thank you.
I tried my best.
The shirt, you delivered everything.
I
You're the good.
love it.
I think we just have to realize, like, if the person's sitting beside me, at some point they're gonna really bring it. I'm like, that person's good.
Good job.
Yeah, that guy.
Thank you.
Well done, sir.
Sarah, you got something you wanna?
The only thing I would say that I think we haven't talked about on the flip side of that is, say you have no money, right? You're like, listen, I jam, I work my butt off, I just can't, like, I want to be better, I want to break the mold, I want to be the first one in my family to buy a house. There's programs, there's grants for people that they'll give you money to buy a house, right? And it's forgiven a lot of times. Like, they forgive these grants. So don't be afraid to say, I take applications every day, and they're like, Sarah, I have, $800 in the bank and I just got paid. And it's like, okay, it's okay. So part of this process is you being honest with me and me trying to find something that is going to work in your life and your situation.
Yeah.
But there is money available even today, and
Absolutely.
and you hear sometimes, I don't know if you hear this, but they're like, oh, it's the end of the year, like all the they've all fizzled out. It's not true. You know what I mean? And
First front door grant. Yep.
yeah.
I know.
If somebody tells you that, it's not that they're not being honest. They just might not offer that program.
Right.
So that's
There's
why
so
it's
many
important
outlets.
to
There is.
to look into it. But that's the opposite of
Yeah.
that. So yeah.
Yeah, you just can't be afraid to ask for help.
No.
Sometimes you need
Right.
help.
Yeah.
Right.
Everybody at some point in their life
Right.
just needs a little bit of
There's
help.
no question.
No, and I'll go back to it. Like, life happens. Like, and it's okay. Like, nobody is perfect. Everybody has a hard time. If they say they didn't have a hard time, they're just great for them. I mean, like, good for
I'd
them.
like to meet one person.
But you know what I mean? Like,
We're trying to warn them, like, hey, if you haven't had a hard time,
It's
it's coming.
Look,
Right
right,
here, right now.
Keep living.
yeah. So, but I mean, like, life happens, and it's okay. Like, you shouldn't be ashamed of anything. You know what I mean? So there's always a way. And I tell people that all the time. I'm like, listen, even though your credit might be low or you might not have a lot of money in the bank, if we can't do something right now, if this is something you want, we're going to make a plan for you. So you have a goal to work towards, right? Like, whether it's building your credit a little bit, or maybe you do need to save a little bit of money. You know, it just all depends. You have to start somewhere.
Right.
You know what I mean? You have to start somewhere.
Definitely do.
I told another friend of mine about mortgage a couple of days ago. I finally talked to him getting pre-approved. We had some questions about, like, hey, what's the credit going to look like? What's the DTI going to look like? He's like, hey, look, don't worry about it, because you're going to get really two answers: yes or not yet.
Right.
He was like, don't you
Not
mean
yet.
no?
Not yet.
No, I don't mean no. I mean, you're going to get yes or not yet. Here's what we need to work on.
Mm-hmm.
And we'll work on those things, and then it's a yes.
Right.
As long as you follow the plan that's in place and you took action, it's not a no. It's just a hey,
Right.
maybe not right now.
And I'll say this too. Just remember, like, anybody can publish a website, right? Like, you can go on GoDaddy.com, if that's even still a thing. I'm probably
I
aging
remember that.
myself.
I remember that.
But you can go on there and you can make mortgage101.com and call it like the lay of the land. don't Google things. Like, it is so important to like go and just like doctors, like get more than one opinion. Like, you're gonna see like stories are gonna line up. People who know what they're talking about are gonna be saying the same type of things. But when you're Googling things and you're trying to figure out, okay, what does my DTI, LTV, what's DU, LP, all of these things, like
So-
those are all mortgage things
It's
that
going
you're
like
like,
WebMD. Like I have cancer and my heart's gonna explode.
yeah, I literally say that all the time. So, like, you're a financial advisor. So, like, we're throwing up all these letters, and you're like, are we like alphabeting here? Like, what are we doing?
Right.
But
Yeah.
like, don't do that, because that's why you talk to people, and you can get like. There's no rule that says you can't talk to more than one person. Like,
Right.
you've
It
got
doesn't
to.
cost anything either.
It doesn't. And it doesn't. And I mean, you have to, vibe with that person. They have to understand you. You have to talk to somebody who's going to listen, like be a listener,
Totally.
so.
Yeah, even in the commercial space, when I have clients that will use me for repeat business and like, hey John, I want to go talk to this bank about whatever I'm trying to do. Hey, cool.
Good, because you're going to love me when you come back.
That's right. I'll see you. I'll talk to you in an hour.
What I
Yeah,
actually ask
yeah.
you to do is, hey, give me first look or give me last look.
Yep.
It doesn't
Give me a
matter.
look to me
Yeah.
first.
Give me a look.
Give me a look and let me have a chance to compete on it.
Mm-hmm.
Don't forget about me, but sure, go shop me.
Yeah.
See what's out
Yeah.
there.
And there's no shame in saying, and I've said it before to people, I'm like, no, what they're doing for you, that's great, because everybody has like their in-house thing, like we are just gonna jam at this, and we're gonna do this, this to help buyers, and it's gonna be a certain program. Like, everybody has that.
Yeah.
If somebody comes to you, there's no shame in saying like, no, you need to take that deal. Like, that is really, really good, because that's what a good loan officer, advisor, realtor, that's what you do. Like,
Can I ask you for a shameless plug? What is your thing? So you just said most people have a thing, like something that they really jam at, they're really good at. What's you guys' thing? Like, the people want to know. What's your thing?
so I would say, and this is gonna sound so stupid, and it has nothing to do with loans. My thing is, the most fundamental thing is I answer my phone, I do what I say, and I say what I mean. And if I don't know the answer, I'm not gonna just BS you. I'm gonna
Right.
say, look, I am not 100% sure. Like, let me double check a few things.
Yeah.
Sometimes it's calling you and saying, hey, have you had this happen before? Or, hey, can you do this? Like, that's my thing. Anybody can write a loan. You know what I mean? Anybody can do a conventional cookie cutter loan. Anybody can do
For
a
sure.
government loan. Like, we all can do that. Like, that's kind of that's our gig.
Right.
That's what we do. But, I would say that my shameless plug is that I'm available. I answer my phone, and I try not to leave people in the balance.
I don't look like it anymore, but I used to be an athlete. And my coach used to actually say, like, the best ability is your availability. So, like, goes a long way.
Yeah.
Yeah.
Does.
I need that on a shirt too. We need all like
I
come
do.
to work.
Well,
There's a lot of market
One-liners.
research. Yeah, there's a lot of market research that people almost never fire their advisor on performance. Almost never, because if they're in a similar asset allocation, the performance firm to firm to firm is going to be about the same.
Yep.
They fire them because they don't call them back.
Well, that's
That's
just
simple.
that's
They're
just
not
it.
available to meet with them.
I
They won't
mean-
spend the time with them.
Yeah,
That's
I
why
mean,
people get fired.
Your situation is your situation, and people who have bad credit, they know their credit's bad.
Mhm.
You know what I mean? Like, they're looking for help.
Right.
They call for guidance. You know what I mean?
Yeah.
So it's just one of those things. Like, you have to do. I say that this job is 20% loans and 80% therapy, because it is. Like, you have to.
Preach.
Because people don't know. It's just like when I go to the doctor and I feel like my heart's beating fast, I'm like, I'm gonna die. And they're like, settle down, you have reflux. Like,
Right.
you're fine.
It's gonna be
You know,
okay. It's gonna
But
be all right.
it's the same thing in our world. When you start talking to people about money, they
Mhm.
freak out.
Mhm.
So it's like our job to keep them calm,
Yeah.
keep them knowledgeable to a point so that they don't lose sleep at night, and to just be accessible.
Yeah.
You know?
I think that's something for you guys that I really don't want to be a part of. And I give mortgage loan officers so much credit for it, because for you guys it's such an emotional time for you.
Mhm.
Hey, I've had people say, I can see myself living in this house. I can see me raising kids and having a family.
I really want my Christmas tree up and before.
Yeah,
Yeah, can you close? Yep.
It's such an
absolutely.
emotional thing,
Mhm.
and
Commercial.
Commercial is like, for the most part, there's some
Business.
emotion to it, but it's business.
cut and dry.
Sometimes, it's, hey, I can see my business operating here.
Mhm.
It's like, okay, if you can't see it operating there, can't you see it operating there too?
Right.
Yeah, right. Good.
Yeah.
But it's such an
That's 1,000
emotional.
more square feet.
Yeah.
Of course I can see it.
But you're right though, but that's what keeps us coming back, right? Because
Yeah.
we can be the person that helps them achieve that goal,
Absolutely.
right? And that's what makes it all worth it. The
Mhm.
11 o'clock phone call from a loan officer, or in your case, 11 o'clock, call from one of your borrowers or a real estate agent, feeling that sense of completion at the closing table is where you feel the fulfillment.
Yeah.
We are doing something that's noble. We are serving,
Right.
and that feels good.
That's a good way to put it. You're serving.
Yep.
You're serving your community
Exactly.
and your people and your families that you're dealing with, and it's just it is a good feeling. I mean, it's hard days too, but
Heck yeah.
at the end of the day, you just do one day at a time, one thing at a time.
Yeah.
Yep.
Some days I want to turn in my license.
I hear you. I understand.
There you go.
Yeah. Yeah.
But then
that's
you remember those days where you
Without
hand keys to first timers, or I like to call them first generation home
I like that.
buyers. Because I have sold more homes to people who's never owned a property, and their family, like, they can never remember. You know what I mean? Don't remember ever having a homeowner in their family.
Yeah.
Like,
Kids
imagine
never-
giving keys to
yeah.
that.
Kids who never had their own bedroom.
Yeah.
And they get their own bed. Like, it's just the little things that you really take for granted, and
Yeah.
you're like, oh, there's something bigger happening here.
Absolutely.
It's a
Yeah.
a family changing experience.
Yeah, for
Absolutely.
sure.
Momentum
Without a
builder.
Mhm.
Yeah.
Mhm.
What you got for us, Tom?
My gosh, I think I've emptied the tank.
Have you?
All about Coach.
We did know, but it's a passionate discussion. This has been a really good, real discussion,
Yeah.
and it's a wonderful feeling. Yeah, I have partners in the room, but quote unquote a competitor. But
I'm outnumbered.
but it's not that way.
Yeah,
it
for
doesn't.
sure.
It's
Not at
not
all.
going to be that way. It's not the way that we operate, and I think that's why everyone on this table is successful.
Yeah.
Right.
Yeah.
And that's just the truth.
Absolutely.
Collaboration over competition.
That's right.
Put it on a shirt.
Oh, it needs to be a shirt. So let me look at
We
this.
can have a couple of nice shirts after this thing today.
Yeah, let me just interrupt this just so I can see if there was any questions. Oh,
I didn't. Let me see.
let's see.
Can you take a screenshot of us so I can put it on? So
Yeah,
is that cool?
sure.
Yeah.
I'm not afraid of that.
Yeah.
I'm gonna share the whole video soon.
There you go.
As soon as I'm out of here, share.
Oh yeah.
Like and share.
Every one of my family members is going to be shared as well. I'll tell you that.
There it is.
My family is very shameless.
And I feel like
on
we-
social
It's you,
media.
Fontaine.
Way to go, yeah.
I know I just heard that.
I feel like we
Looking
didn't
great,
give
looking
the
great.
president any props today. Anytime I come on here, just El Presidente over here.
Oh,
Putting it
yeah.
I
together.
know.
Thanks for putting it together.
Absolutely.
Yes, thank you so much.
It's been great. So, guys, I just want to thank y'all for showing up. We'll get pictures afterwards,
I
guys.
thought that's what we were doing.
Yeah,
we're all.
We're still live. We're still on. So, guys, we just want to thank our panel of experts. Look at these guys. Like, they are so great. We just want to thank them for coming in and spending some time with us. And we will make sure all of their contact information goes inside this post so that you could reach them. And if you have any questions, you can certainly still post them in this feed and we will get them answered for you. So thanks, guys. This is Spontaneous Green, and we'll see y'all next time. See ya.
See ya.